Today, crypto prices slumped for a second straight day. Coinbase lost more than $500 million in 2022. And Mike Belshe of BitGo reacts to the SEC's crackdown on the crypto industry. Welcome to CNBC's Crypto World. I'm Kate Rooney. Crypto prices taking a hit yet again this morning. As of noon Eastern, Bitcoin dropped 3.5% below the $24,000 level. Ether, meanwhile, held slightly above $1,600, while Polygon dropped 4% to $1.33. Okay, let's talk about some of the top stories. First, Coinbase released fourth quarter earnings yesterday, and the user numbers just didn't quite meet Wall Street's expectations. Monthly transacting users fell from 8.5 million in the previous quarter to 8.3 million. Trading volume fell 9% as well. The crypto exchange did bring in more revenue than anticipated, $629 million to be exact, and the company posted a loss of $2.46 per share rather than the $2.55 that analysts had expected. But Coinbase still posted a $557 million loss for the fourth quarter, just a year after posting a more than $800 million gain in net income. Next, Polygon Labs just joined the growing list of crypto companies cutting jobs. The Ethereum scaling platform announced yesterday it was cutting about 20% of its workforce, or around 100 jobs. In a press release, Polygon Labs said it, quote, consolidated teams earlier this year, and that as part of that consolidation reduced its workforce. CoinDesk reported that the job cuts will mostly affect employees in the US, Canada, and India, which is where most of its workers are located. In response to the cuts, Polygon's Matic token fell as much as 5%. Last up, the Federal Trade Commission is investigating Voyager Digital for potentially deceptive marketing practices. In a court filing, the FTC objected to Voyager's plan to restructure because the plan would have prevented any claims of wrongdoing. The FTC said, quote, the debtor's proposed plan should not be confirmed because it impermissibly seeks to give the debtors a discharge to which they are not legally entitled. The FTC respectfully requests the court deny confirmation of the proposed plan or strike the releases and injunctive provisions. As part of that restructuring, Voyager would be sold off to Binance US, and according to CoinDesk, an attorney told the bankruptcy court that plan was, quote, full steam ahead. We reached out to Voyager for comment, but did not immediately hear back. All right, on to our main story for today. As the SEC's crypto crackdown is front and center, CNBC's Mackenzie Sigallo sat down with Mike Belshe, he's the co-founder and CEO at BitGo, about the agency's proposed rule changes and approach to regulating the nascent industry.
So we've seen a lot of decisions coming from the Securities and Exchange Commission this week. Most notably, on Thursday, they're considering this proposed rules change that would affect the qualified custodian category. This has a lot of ramifications for the crypto sector in particular. What does this mean for BitGo?
It's actually great. So finally, we're starting to see the SEC come forward and proactively say, here's what we think should be the market structure. So BitGo's been advocating for market structure, starting to separate exchanges from broker-dealers, from custodians, from clearinghouses for like 5 years. I've actually been somewhat flattered to hear some of the phrases we've talked about with just separating trading away from custody as a way to start to build that structure. So finally, we're starting to see the SEC move here, so that's the good news. The bad news, if there is any, is I think it's going to take quite a bit more time. For BitGo, we're a state-chartered qualified custodian. We provide our services in a fiduciary manner. It's clearly something that's allowed as a qualified custodian for securities and various types of assets. Overall, the industry is reacting positively. We've seen a lot of business come to us that previously might have been using non-qualified custodians, saying, "Look, we gotta move to this model."
Even in the last few days since the SEC decision has come. And what are these new customers saying to you as to why they'd want to migrate their business to BitGo in light of this SEC decision?
Well, to be honest, in the traditional securities world, this question of who's a qualified custodian doesn't really come up. The traditional players are known, who's allowed to do which activities has been long established. So there's a number of good providers to use for different types of activities. In the crypto world, it's been a little bit unknown. So if you are an RIA, if you're anyone that's covered under the Investment Advisors Act, you're now like, oh, okay, so I need to start thinking about this. Who is a qualified custodian? How does that fit in? We don't have the market structure for crypto fully defined or as precise as it is in the SEC world, the CFTC world. But this tells anyone that's under that ruling, you better get under a qualified custodian. They kind of knew this already or expected it, but now they're saying, okay, we better start moving towards this. It takes a while to get this to move your assets, to modify your security controls, your operational controls, and set up your qualified custodian right.
So obviously BitGo is in a much different position than the exchanges, like a Coinbase, for example. Currently, around 35% of exchanges custody their crypto assets with BitGo. That's my understanding.
It's a big number, yeah.
Do you see that growing? Do you think that more exchanges are going to come to you to help them with their custodial needs?
Well, on the exchange side, maybe not so much right now. So remember, the SEC did not make any ruling about spot exchanges, which is what most of the crypto exchanges are. What they're talking about is those covered by the Investment Advisors Act, which is RIAs, it's some funds, it's wealth managers, things like that. So those parties that previously might have been going direct to a spot exchange are now saying, wait a minute, I can't just store this on the exchange, I need to find a custodian instead.
I mean, have you seen in the last year, like as FTX imploded, as a lot of these, once very popular names, whether it was 3AC or Celsius, entered bankruptcy and have been facing all of these allegations and lawsuits and the fallout from the decimation of their business models. Like, have you seen any customer confidence rocked with respect to BitGo, or things have they been continually on an upswing because of what we've seen in other corners of the industry?
Yeah, the great thing about the industry is that every 2 weeks you have some new drama to think about. And 2022 definitely had more than its fair share there. Look, FTX first and foremost was a fraud, and it's no different than Bernie Madoff. So these things can happen. And I think the lack of regulator involvement actually had a direct line for why FTX and other platforms with less regulation have grown so quickly. Like, there's definitely clear demand from Americans that they want to be able to participate in Bitcoin and other types of digital asset markets. So we need to have some path forward. And if there is no regulated and approved path, people will find a path. As an example, I think we've had about 25 different applications for ETFs here in the US. An ETF product for Bitcoin, super easy to build, very straightforward. The parties that are asking to provide ETFs are well-known traditional financial services companies already regulated by the SEC for years. We could put this out. It would mean that you'd be able to have access to Bitcoin directly from your stock brokerage account, using all of your existing conduits with no new parties. The regulators would have what they need, and we probably wouldn't have seen this huge outflow of funds to FTX and other less strong financial services companies.
Mm-hmm. Are you having conversations with the SEC or the CFTC or FinCEN or any of the other bodies trying to get either ahead of regulation or just to get on the same page?
All the time. So, I mean, it comes in from a lot of different angles. I think I first went to the SEC headquarters, 2016, 2017. Look, the industry has to grow to kind of a certain size before it catches the attention of regulators. I think when we first started going there, Bitcoin and crypto was kind of too small. They're like, how much time are they going to spend on something that's only about that big? But now it's grown. Obviously, we've had multi-billion-dollar failures, and that's spectacular. So they're much more engaged now than they used to be, but it's constant.
We also saw Paxos say that they would no longer be issuing BUSD, and we've been chatting about stablecoins and their place in this market as well. Does that give you pause about what might be the thought process with regulators and what this means for US dollar peg stablecoins in particular?
Not really. So, this is a place where enforcement actions coming down versus proactive policy actions coming down are so different. So I don't think anyone actually knows exactly what they're looking at in terms of Paxos and BUSD. We all can surmise and have our own suspicions, but we don't really know because they don't write that down. It's an active investigation. We don't know what the outcome is going to be. I don't see anything that's wrong, actually, with stablecoins. There's no clear policy or law that it violates. So if that is true, I hope that the regulator will come out and say that directly as opposed to just going through enforcement actions.
All right, that's it for Crypto World today. We'll be back again tomorrow with a lot more. See you then.